Everyone, good morning, everybody. I want to welcome everybody to another session as it relates to the CARES, certain portions of the CARES Act. Today, we're going to be focusing mainly on the PPP and a lot of matters that everybody has been, a lot of people have been facing. I want to thank everybody for coming and for expressing the concern and sharing some of your thoughts and questions with other participants. As you're going to find out, most of the people that are attending today probably have similar problems, concerns. That's why everybody's trying to get information. And our presenters, we have Ken Bagner, Mike LaForge, and Mark Weber. They're going to try and provide you with enough information as possible and answer as many questions as possible. The format of today is the speakers will speak for approximately 20 to 30 minutes, and then we'll open up the remaining time for the hour to answer as many questions as possible. We'll try and keep the answers brief so we can try and get to as many questions as we can. But last time we had over hundreds of questions, so we try and get to as many as we can. We do look at the questions afterwards. I believe that our website, we provide information to answers to a lot of the questions. Some of them are repetitive too, so if you don't see your question, don't do me a favor, don't just keep hitting me with it. I do try and go through and pick people so people don't ask a lot of repetitive questions. On your dashboard, you should have a PDF of the slides. I will show the slides as the presenters are talking. The outline for the most part, just so that you can see the topics they will be hitting upon, but we're going to pretty much take that information down as they're talking now too. Two other things, if I could just ask you real quick to type into the questions where you're located. I just want to make sure that you hear the sound okay. Just give me the town in New Jersey, or if you're out of state, the state you're in. We will be putting up polling questions, and as soon as we get through the towns, I'll put up the first polling question. The polling question is for two reasons. One, people need to try and get CPE. You have to answer at least 75% of the polling questions, and also just to try and get some information and make sure people are awake. So I'm hoping a lot more people here. Only got a handful of people that answered. I'm going to put up a polling question now. If you could just answer the first polling question, and then we're going to kick things off with Ken Bagner. So hopefully everybody sees the polling question. Hey, John. We'll wait till we get to around 95% or a minute, and then we close it out. The first polling question, if you can't see it, is: have you filed for the PPP? Filed a PPP application? I'm going to close that in a few seconds. So while I'm about to close it out, Ken, Mike, and Mark, somebody asked a question, K1 draw income, are those covered by under compensation? I don't know if for later on, if you want to put that into what you need to address. Yeah, so then I'll close out the poll, share the results. You'll see that 52% have applied, 23% said not planning on it, 21% said still working on it, and 4% said that they have problems with the system. I'm not surprised with that comment. So with that said, we're going to go to Ken, who's going to, Ken, you've been working with this whole thing for a long time. It's like an enormous onion that you've been peeling back, and every time you think you've got a blooming onion that looks good, the government decides to change something on you. So can you give us the state of the onion on this?
Sure. Well, just stepping back for a second, you know, as far as what's going on is with the banks and what we're seeing and what hiccups we're seeing. Obviously, as Brad mentioned, the IRS didn't really roll out this program very well. They keep changing on Q&As. how you calculate information. Some of our clients submitted the information. Once it's accepted, it couldn't be taken back. So they added the IRS when they said 3 days ago before that you couldn't include any comp over 100. Now you can include comp of 100 plus health insurance and 401k and state unemployment and disability in addition. So that was contrary with their Q&A. But on the bank side, it's, some of our clients are really worried because it's first come, first serve. And I can tell you major banks still are not up and running on the program at this point in time. Some banks are and some banks aren't. Some banks have told us that they're waiting to set up the program because they're going to have it electronically direct to the SBA. And then you call local banks and they say all the other banks and the large banks that are up and running are paper pushing, and all of them tell you they're not paper pushing. They already have their electronic system up and running. So it's hard to know what to believe of what's going on. What I do know is some of our clients still do not have access to very large banks to bring in their applications. And it's first come, first serve. We hear there's allocation of money per bank, so not to worry about it. But in the same respect, it's hard to tell what really is real and what's not real. So some of my clients and some of the firm's clients have moved to other banks. They've found some success in different ones. Some local ones have helped because it's been more personalized. Some larger banks that they had a bank account with, which is helpful. If you have an account, it makes it a lot easier because you don't have to fill out we'll call know your customer application that will then you'll fill out information and try to set up a bank account, because remember, you have to have money swept into this account from the government, and you're not going to have that money put into your account if you don't have a bank account with the bank. So the issue is, that we're finding is the best course of action is if your current bank that you use on a normal basis isn't accepting it at this point and you're really worried about it. If you have other bank accounts with other banks, you should reach out to those banks to see if they'll take you. If not, some of the local banks are quicker at setting up accounts than the large ones, but it just depends on who you know. If a large bank is good as well, it depends on the person you know, and if you could be able to get some personalized service. But just imagine every single banker here has basically all their customers that they've built up over the years all asking for a loan at the same exact time. It's really, for the bankers, it's pandemonium right now, and trying to service every single client and let them know what's going on. In addition, one of the bankers I spoke to told me they're asking me to certify all the information and I have to sign the application. So the bankers have to sign it. The government wants the bankers to review this, even though they've said in the Q&A that the bankers aren't responsible if the information's incorrect, but they're still having them sign it nonetheless. So they have to go through and do their due diligence to make sure the information's done correctly. So again, things are held up in the queue. What I will say is this: there's a confirmation number that you get back from the SBA. You could ask your bank for it. If you're in the process right now where you filed but you haven't heard anything, some of the banks are saying, oh, there's no confirmation number. Well, I have letters from the SBA with the number of what your application number is from clients who have been accepted in the program. And I know Mike LaForge, we were talking last night, he has some clients who have actually received the money at this point in time. So they're actually funding the first couple ones that have been filed very early, very quickly. They're saying that the funding should be within a week to 2 weeks tops, but a lot of them we're seeing after the application gets in and submitted, at this point, it's taking only a couple days to fund. Now that may not continue as they get overwhelmed with the applications. So Brad, that's what I'm seeing on the bank side of this. The navigation of it is just to make sure that you get your application in with the bank that you're comfortable with.
Okay, great. I mean, the banks, I know that we keep a list of who's participating. Some of the angst that some of the people are feeling is that, as you said, their bank isn't open yet, or not open, not taking applications, a first come, first serve that they're hearing on the news. What would you tell them what do you recommend to how do you advise your clients when they are showing this angst?
Well, some clients have extreme angst, so we try to find another bank for them if we can. That's what we've had to do, because they just don't feel comfortable sleeping at night without having their application in. We do think that, that you could take either path. You could wait for your bank to come up because the banks are theoretically, from what we know, allocated funds. So if you're a large customer with that bank, and you're constant contact with your relationship manager, they should get your application in and you should be okay. I have heard also that this program is not running out of money probably until the end of next week at a minimum, but they also have they're talking about extending the program for another around 250 billion roughly that they're trying to get passed for an additional extension to make sure everybody benefits from the program. So again, you can look at it both ways. It depends on what our clients want. If they have a lot of angst, you got to help them find the right and navigate to the right place. If they feel comfortable waiting because they feel like their banker has their interest and is going to push it through right away, then wait another day or so until you can do it.
One of the things that I spoke with a client about that I think that people have to understand too is they're trying to call the bank and they're not getting calls back. And not here to be a defender of the banks, but I would like to know your thought is they shouldn't expect to be getting calls back just yet because the bankers are inundated with calls and messages and trying to understand this whole thing themselves.
Yeah, no, I get both sides of it. I mean, the bankers are overwhelmed, but it'd be nice to get a quick email or text back or whatever it may be. I'm on it, or I'm going to get back to you. Some of my clients and some of the firm's clients I've heard from other partners, like they're just not even getting back to them for days, and that could have an everlasting effect on a relationship with the bank. And some of my clients are saying, after this is all over, now I know when there's a real emergency and there's a real problem that my people who are servicing me for the bank are not really in my corner. So, for bankers, again, they just got to make sure. I understand that side of it, but the other side is the clients are feeling a lot of angst, and, a quick 2-second email, even if it's later on in the day, would be helpful to them.
Okay, great. Well, surprisingly, we haven't gotten any questions come in about the banks yet. I'm watching for it. So maybe we'll probably be coming back to you, Ken, as I see questions start rolling in. The next person that's going to talk is Mike LaForge, who will be discussing a couple of areas relating to forgiveness and self-employment. Mike?
How's everybody doing this morning? In case you see me waving my hands back and forth, I got this little gnat that keeps on flying past me. I'm trying to catch them on the way in or out, so I do apologize for that. But I can imagine what everybody's going through from the standpoint of concern and stress over this loan program and the application process, because it has been a tremendous amount of stress put on people, be it people who didn't go to bed last Thursday night thinking that they had to jump online at 12 midnight Friday, and turns out that they didn't have to because nobody was ready, to people working on this thing all day Sunday and into Sunday night and continuing right through this week. So it has been a challenge. It's a challenge not only for the people doing the applications, but as Brad said, the bankers themselves are going through an extreme amount of pressure. They don't know the rules. They don't know a lot of, and I don't mean that bad from the standpoint they don't know the rules. They don't know how this thing is operating because it's operating through the SBA, which is something that's a little bit different for a lot of them, and the rules are different. They're not your standard SBA rules. So, with that, I started thinking a couple weeks ago about this whole bit. What happens next? Now that I have the money, what happens? What do I need to be aware of? What are the traps? What are the things I just actually have to do? So I sort of put together this list of top 10 items. I figured that'd be a better way to present it because, in all honesty, I don't think we're going to see any rules or anything or any guidance from the SBA. I was told by someone from one of the banks that we're not going to hear anything until the end of the end of April. Anything as far as how this loan and this loan forgiveness program is going to work, because I think that's the big part. It's one thing about getting a loan, There could have been other areas of getting loans. You could have gone to your bank. You could have gone through the other SBA process, which would be the EIDL loans. But this PPP program is very different in that you borrow the money, and if you do what you're supposed to do, and you do what they're telling you to do with the money, you don't have to pay it back. So I'm just going to run through a couple things here, and just to back up once more, I do have a couple clients that I'm working with that have gotten their money. So I'll touch on some of that stuff. So item number one, if you're keeping track, okay. Item number one, the whole idea of PPP is Paycheck Protection Program. It's to maintain payroll. It was meant to be a way for employers to pay people so that their employees did not have to run down to unemployment. It was also the intention of maintaining headcount. So the intention wasn't that, okay, we're going to give you $1 and you can spend it anyway. You can lay off half your workforce and then double the salary of someone else. No, there's going to be something that's going to come along that the SBA is going to provide us that's going to show us how to calculate the payroll portion of this. When I say payroll portion, but whether or not you're spending the payroll the right way, but also the headcount. Basically, in a nutshell, if you applied for a loan and the loan was, $1 million, there's going to be a formula that's involved that's going to show that you need to spend at least 75% of that money on payroll. And in some way, shape, or form, you're going to have to maintain headcount. I don't know if anybody else on the panel has heard anything. I don't know whether or not they're going to ding you on the loan portion based upon some sort of a ratio of what you spent versus what you didn't spend or what. That's not out there. So, that's point number one. Point number two is I've had a lot of discussions with clients as far as, how this loan process worked. They said, there was a little confusion from the standpoint of trying to work in rent and utilities on the application. And I said, no, you got to understand there's two pieces. The application part, where you took the payroll and multiplied it by 2.5, that just established the maximum amount of the loan that was available. So it was the maximum, either 2.5 times the average monthly payroll that you submitted for 2019 or $10 million. My thought is that that formula was based upon the idea that approximately 60 days of payroll, 8 weeks of payroll was going to be paid through this program. So that would equate to about 2 months. And then the other half in that formula, in that 2.5, was supposed to cover your occupancy costs, whether it was mortgage interest, whether it was rent or things like that. So that's sort of how that I interpret that 2.5 coming about. Okay? So that's item two. Item three, once you get the money, I think everybody has to be very, very careful with that because the clock starts. Okay. And again, I'm just talking about forgiveness. So if you're intending on going for forgiveness of this loan, you get that money on April 13th. You don't have it. The loan forgiveness program doesn't last for 2 months. It lasts for 56 days. It's 8 weeks. So if you got the money on April 13th, the loan forgiveness portion of this thing, you would have to spend the money by June 7th. Okay, that would be 56 days. That would be 8 weeks. Again, it's not 2 months. It's not 60 days. It is 8 weeks. We are going to find out exactly what the SBA considers to be 8 weeks. I don't know whether it's 8 weeks and it's 56 days. Maybe it's going to be 57 days if the 56th day ends up on a Sunday. We don't know that. We'll have to find out. We'll monitor that. But for right now, I think everybody should be conscious of the fact that there's going to be strict adherence to a 8-week period for spending the funds in order to get into the forgiveness program. Okay, so that's point three. Point four is a reminder. I said before, Paycheck Protection Program. The money is supposed to be used for payroll and occupancy. Occupancy being rent, utilities, and telephone. Pretty simple. I don't know what's going to happen if I haven't seen anything that said that you have to segregate the funds when they come in. I'm not saying it would be a bad idea, but at this point in time, there's no guidance at all. So that doesn't say that you can't commingle it with your other funds, but again, the money is supposed to be earmarked for paychecks, payroll, occupancy, rent, utilities, things like that. So that's point four. Point 5, forgivable costs. Forgivable costs, that's kind of funny because I'm laughing because week and a half ago, we weren't sure what payroll meant under these guidelines. As Ken mentioned before, the definition of what was applicable payroll for purposes of the loan changed, and we're assuming right now that the definition of payroll for purposes of the forgiveness is going to be the same. It's going to basically be up to $100,000 of base pay, and then anything that is over that from the standpoint of the pension payments and health insurance would also be added. Now, again, this program is supposed to cover an 8-week period. So you have to understand that the payment of salaries would only be for a period that starts, like I said before, the clock starts the day you get the money and it runs for 56 days. Some of the interesting things and some of the traps that are going to be encountered have to do with the payment of interest on your mortgage, payment of rent, and payment of utilities. In each one of those cases, you would have had to have the debt or the lease or the service, your utility service, in place on February 15th. So right away, my concern is that for clients that have leases and rentals that they're paying on a month-to-month basis, according to what we're reading and according to what is out there right now, that would not be a forgivable portion of the loan. So you got to be careful with that, and you have to recognize that. So that's one of the traps that I see coming, because people will assume that rent is rent. Rent is not rent according to the way the law is structured right now. Rent is only something that is paid under the terms of a lease. The other trap as far as forgivable costs is a lot of clients have gone to landlords and asked for rent deferral. So instead of be paying, $10,000 for the rent on May 1st, can you defer $3,000? That's all great, but you have to be careful, because if you defer that $3,000 and you push it back into August, it's not going to be part of the formula for forgiveness of this debt. So I think what happens there is, and we'll get into this a little bit more, clients and recipients of the loan have to be conscious as to how they're spending their money and how they're actually emptying, the bucket of cash that they have. Okay, so that's item number 5. Item number 6, again, without guidance, I can only tell you that you got to watch your calendar when you're spending your money. I go back to what I said before. It calls for 56 days. That does not mean that if I pay my rent on the 58th day, that it may be something that's forgivable. It does not mean that if I actually owe money for rent or utilities, but I don't pay it until July, that it's going to be forgivable. The way I'm interpreting it right now, just like everything else that has to do with a lot of, government deductions and payments and that type of stuff, cash basis. I think out of the gate, you have to think about how you're going to squeeze all those payments into 56 days. That brings us to something else that's interesting, because depending on when you get the money, like I said, you get the money today, it starts the clock. You can have 8 weeks, but you can actually have, because of the way the calendar falls, you may have 9 weeks of payroll. You may have, if you pay twice a month, I guess you have to time it the right way, but it might not line up with the calendar the right way. So you have to make sure that your payroll periods, so 6 periods, are inclusive within that 8-week period, because there's a possibility that it wouldn't be. And then the other thing is that if you pay biweekly, you can actually have, instead of having 6 payrolls, you can squeeze 7 payrolls in there. I don't know how that's going to work from the loan forgiveness program, because in those cases of having that extra payroll on a weekly payroll or having that extra payroll on a biweekly payroll, how that's going to work in the calculation. I don't know whether or not that's going to trigger something where there's a limitation, but we'll have to see. But again, just be conscious of that. Item number 7. I think what you have to do, at least what I'm suggesting to clients, they have to keep a snapshot. I think what you need to do is set up some sort of a spreadsheet, and we'll have one just as a sample to put on the website. You have to set up a spreadsheet that basically puts the money into a bucket, and then you keep track over the 56-day period as to how it's being spent down. Again, it's mostly so that you can monitor the 75% that has to go to payroll, but also monitor how you're spending and when you're spending money over the course of a month. you'd hate to get into a position where on the 58th day, you spent that last $100,000 that you thought was forgivable, and you find out that, something got messed up. The time tracking of the payments was not in accordance with what the SBA rules are going to be. So I'm suggesting to everybody that you set up a spreadsheet. You start with the amount. Where's my hand over? You start with the amount on top that comes in, and then work it down with the allowable, or I should say the forgivable cost, so that you actually come down as close as you can to zero. Now, some clients are not going to get down to zero. They're going to have to give some money back, because I've had a couple situations with clients where they're in a self-owned facility. So in other words, they own the property. They're not paying rent. They don't have mortgage interest and that type of stuff. If you remember what I said about the formula, my interpretation is that 20% of that 2.5 times formula was supposed to be geared towards the occupancy. And if you don't have those costs, you're going to have to pay those dollars back. Whether or not you can sponge that up or suck some of that extra dollars up with payroll, I don't know. We'll have to see what the SBA comes out with. So like I said, I think everybody should maintain a snapshot, keep it in real time, so you know exactly how you're spending your money, so you're not regret later on that you didn't spend it.
Mike,
Yes.
Mike, while you're going through that, I just wanted to give you a chance to get a breather too, because some questions have come in, and I wanted you to reemphasize the point. The 8 weeks, as you're saying, is 56 days, including weekends. They should treat this on a cash basis. Doesn't matter about the pay period. And what I just did is I kind of summarized a bunch of questions there that came in, and you seem to have hit a lot of these, but I wanted to reemphasize them because I think it's important what you're saying. You don't have to segregate the money. You can commingle it. But to your point, Mike, they should be keeping track of how they're spending the money, because as was put on the agenda earlier that Ken has made comments about, of keep track of this information as best as possible.
Right. I agree. Everything you said was right on. And I think we also have to be very conscious of the fact that we are not working with any kind of solid guidelines right now. They're not out. I'm making some assumptions. I'm using some logic. I'm using things that I'm saying to myself, if I were on the other end, if I am auditing someone's claim for loan forgiveness, if I am reviewing it, what would I look for? What would I expect? We're going by what would be precedent, not necessarily under SBA rules, but under tax rules from the standpoint of cash basis. Things count when you pay it for many taxpayers, as opposed to like an accrual basis. I can't. Let's say I'm short on payroll. I didn't make all my payroll in the 8 weeks. I don't see there's any way that you're going to be able to take the position and, oh, gee whiz, I'll pay those guys I'll pay them in July for the money I owe them for June. That's not what this thing is about. So I think that, we're going to get guidance. I hope, I don't know when, but I think you just got to go and use logic and common sense as far as this is concerned. Okay. Number 8, document. Now, what does that mean? I think as you go along, it's certainly easier to get your documentation put together, and we'll get a little bit into more about that in a couple minutes. But when you pay a payment for your health insurance, when you put your money into your 401k match or something like that, keep the documentation so that it falls into and make sure it falls into the 8-week period, and have it ready, because you're going to have to submit it at some point in time for the loan forgiveness. So document all those things. I even suggest that as you go along, maybe as you interpret things, document them too. Send an email to yourself. Do something to just be able to give you an idea and give you almost a diary as to how you went and proceeded over this 8-week period. Like I said, I don't know how this is all going to go down when the final rules come out, but it can't hurt to document this stuff just to make sure that you are ready. Number 9 is not a monetary issue. It's a people issue. And I don't know what the right answer is going to be, and I don't know yet whether or not employers have faced this. So I get $1 million and I'm told I have to spend it over an 8-week period for payroll. Half of my people, I need to work. Half of my people, I don't have work for them. So at this point in time, I send those half home, and the other half, my essential people, come to work. Well, under this Paycheck Protection Program, there's that bug again, I just got him. Under the Paycheck Protection Program, you have to maintain payroll. So if I said I was going to spend $1 million on payroll, I have to spend it, or else I have to give it back. So what happens then? So I'm the employee that's deemed to be essential. I'm coming to work, I'm getting paid. What about the person that's staying home, not doing any work, and still getting paid? I don't know how that's going to work. Yeah.
Mike, on that point, when I've talked to clients about that, I've said, do what works for your business, because it's kind of like a pot of soup. You have a whole bunch you put more and more soup into the pot, and the more soup that's there, the more forgiveness that you get. But why are you going to put it in the pot when you're going to still be paying potentially 10 to 20% out, net after the forgiveness potentially? Because remember, 100% of this loan may not be forgiven, so you're still may be out of pocket. So use judgment, business judgment on that end to make sure that you're doing the right thing for your business, not to just pay people when you shouldn't be paying them.
Right. That's absolutely. I mean, I have some clients that are coming up with some solutions how they're going to do it. So there's one client that employs 30 some odd drivers, for local deliveries. So the question becomes, how am I going to do that? So I said, listen, consider taking the total hours or the total days that you think you're going to work over the 8-week period and split them up amongst your 30 drivers. So this way they're all working the same amount of time. He gets into the other thing. I got people who are refusing to come into work for whatever reason. And I said, you know what? That's something that you probably have to talk to your attorney about that, because I don't know what the rules are going to be, whether or not you can dismiss them or what happens, or whether or not you can, bring in temporary help. That's a tough one. Have another client that's having the same problem at their manufacturing facility where, people just aren't showing up for work. What do? Do you pay the people that are coming to work and pay the people that aren't coming to work? They're supposed to have a conversation on that. There's no guidance out there as far as this people problem that's coming along with this paycheck protection plan. And it's not going to be easy solutions, and whether it's you're paying people and you don't have a receptionist, or that one's getting paid, I can just see that being a problem that was going to be more cultural and more employer type of thing, as far as, what's fair and not fair, and what's fair and what's not as fair. So that's number 9. Number 10 is probably something that people cannot forget. And I started by saying, if you don't apply, it's going to make you cry. Okay, there's no doubt about that, because the way this works is that this is not something where you're going to be approached and somebody's going to say, okay, now it's time for you to do an application for loan forgiveness. That is all on the borrower. I don't know what the rules are going to be, but if the borrower wants loan forgiveness, they got to ask. Okay. We're going to have to make sure that we're right on top of that. When I say we, I mean everybody on this call, everybody who's borrowed money, to make sure that this whole process about making your application for the loan forgiveness, hopefully it's a little bit smoother than it was for getting the loan itself. But that's a key to this thing. If you don't ask, you're not going to get. And if you don't get the loan forgiveness, you're going to be responsible for the loan. It's going to be payable over the next 2 years. And I think the interest rate, it ended up being what, 1%?
1%, and payments don't start for the first 6 months of the loan.
For the first 6 months. Now, interestingly enough, there is one bank that is offering the loans at 0.8% as opposed to 1%. So I guess the banks do have a little leeway on that. So
Mike, you just mentioned the bank having leeway. Do any banks have any preference or ability to process loans quicker because they're an SBA preferred lender or something? Ken, that might be more to you though.
Yeah, I mean, it really depends. They're just inundated. If their systems are electronic, they could do it quicker. If you submit it and they submit electronic, if they're pushing paper, it's taking longer. But the banks are not telling you what they're doing internally. So okay. It just depends. I mean, I've seen a couple banks, I'm not going through this bank or that bank here. Some have done it very rapidly, and some have, we've been waiting for days, and it's like, you're still in the queue to be submitted. So it just depends on which organization or which bank you're working with.
I think what people have to understand too is, that rumor was going around. It wasn't just a rumor. It's true that some banks said, if you don't have a lending relationship with us already, we're not going to offer you this opportunity. And the reason I felt was that they did that was because part of their lending relationship was they've done their underwriting already, or a large portion of their underwriting. So Mark, you don't think so?
Well,
Mhm.
this is not based on normal underwriting standards.
Right,
So
right.
early on,
But it's-
some banks were asking for P&Ls and balance sheets, financial statements. This is true. It's based solely on the payroll costs that you're submitting. And the only thing you have to do is what Ken said earlier, is know your customer. So
That's
if you
that's where I was going. Not as much
That's-
underwriting, KYC.
right.
Yeah, you need a bank account. That's one of the biggest issues, because there's no way you get funded through the banks. Basically is the conduit here. There's no way you could get funded without an account. And a lot of banks say it takes 7 to 10 days to set up a bank account. That's not like that every place, but there's requirements they have to go through to know their customer.
Okay. Mark, before our next presenter goes, because I'm behind on my polls, I think, let me launch the next poll.
Only done one.
Way behind. Was your bank helpful in the filing? So we catch breath. Our next speaker, as we're getting ready, is going to be Mark Weber. I'll show what he's going to speak on. A couple of the questions, Mark, you addressed this at our last presentation. I don't know if you want to touch on it during your presentation. What's included in the 100,000 and how is it calculated? What payroll taxes does it include? Some people think, okay, if somebody makes over 100,000, I can only pay them for the first X amount of weeks till they hit that pro rate 100,000, and that's not accurate. You may want to just expand on that. I know this came from your presentation last week, but people seem to still be confused about it. Can the K1 draw, can draws or guaranteed payments be included? So those are a couple questions. I'm about to close the poll in a second. Some people had some very long questions. I apologize that you type so much, but it's going to be difficult for me to read. But we will look at these afterwards. And some people are asking tons of questions. You should really be reaching out to your service provider, partner, manager at Sobel Company to see if they can help you directly, because I'm trying to let everybody get some chance at questions. Okay, I'm going to close out the poll. Was your bank helpful? 34% said yes, 25% said no, they don't have all the information. 4% said no, the bank did not participate, and 33% said that they're not applying. So for those that are, they're the results. And then we'll go to Mark.
Okay.
Either way.
I guess well, first of all, thank you everybody for attending. I hope everybody's safe, healthy, and sane. Sane is important these days as we're all isolated and locked down. Brad, just regarding your question that you asked, originally there was a lot of debate about the payroll costs, and Ken talked about this earlier. Just the other night, I think it was Monday night, everything seems like a lifetime ago. This stuff's been moving day by day. But Monday night, the Treasury came out with frequently asked questions. And in there, they clarified the point and said it's $100,000 of cash compensation, but it doesn't include the benefits. So you take the 100,000 cap, and then you add the benefits on top of that, which is the employer paid share of health insurance, employer paid retirement contribution, and it also includes the state payment of taxes, which really is state unemployment disability. So you add all that together, and that's your total payroll cost. So prior to that, and we had clients that had submitted using the cap of 100,000 all in. And fortunately, some of them, their applications hadn't actually been processed. They've been submitted, and in the FAQs, number 17 indicated that as long as it hadn't been processed, you could go back to the application and change it. And what we found was most of the banks said, hey, you could do that as long as it's coming from the same email address or the same upload person, and they allowed you to actually go back in and change it. And I had one client, it was $160,000 difference in the loan amount, which is significant. Other clients said, hey, it's only a couple bucks. I don't really want to go back to the well because, I mean, one client started his application at 7:30 in the morning on Saturday, and it was finally submitted after the site crashed, and I won't mention the bank, but after numerous tries, he finally got it in at 6:37 p.m. So, you know, he was working on it for a couple hours, walked away, came back, walked away because they kept saying, oh, we need more time. So he's like, no, I'm not going back to that process. I'll take what I get. So my topic has to do with some of the payroll provider services that are being offered. And one of the things that we found during this process, and this is helpful to anybody who has not submitted an application yet, one of the things we found was that gathering the information that they wanted was a little challenging. And so most of the payroll service providers started putting out some very specific spreadsheets for the PPP program. Unfortunately, a couple of them weren't doing it correctly. And so we took that information and we rolled it into our own spreadsheets. And I think that's the best approach, is to take the information from the payroll provider, roll it into your spreadsheet. If you find that what they have is not exactly what you think you're supposed to have, and then submit it to the bank. The banks are also asking for 941s, 940s, proof of health insurance, proof of retirement contributions. And now that brings me to your K1 question and your guaranteed payments and partner draws. What I found, particular one small, some partnerships, like some law firms, have decided not to include that because they didn't think they should. Some have. I had a small law firm just yesterday that I was communicating with that their bank had absolutely no provision for doing it. The bank came back to them and said, hey, we're only going to give you what's on your 940. That's all. And they said, well, what about our draws? And there was no provision for submitting the draws because they couldn't bury it in there. They just didn't have any way to actually present that information. So now they're thinking about submitting that individually as partners themselves tomorrow under the April 10th self-employed group. The other piece of this topic is, what do you do if you haven't filed yet? And my answer to that is file. You know, if you have any opportunity to receive this money and you're going to have any ability to have some forgiveness, then I think you should file. And what you need to do is, you know, we've had a lot of clients hung out because their banks said, well, you don't have a borrowing arrangement with us, or you only have a business checking. And so they've been forced to go and shop other banks. If you haven't filed yet and you've had problems with your bank, like Ken said earlier, some of the smaller, more, you know, localized banks, not the money center banks, will, you know, look to do business with you because they want your business. If you're a small business and your big money center bank you're dealing with hasn't given you the attention, it's because you're a small business. So you probably need to match up to a bank that maybe fits your needs a little better and you can get some personalized attention. I have literally seen clients where their relationship manager at the bank took their stuff and said, don't worry, I got you covered. And then I've seen, you know, some of the big banks with other clients say, yeah, just submit your stuff and we'll see what happens. So it's really a relationship game. And if you haven't filed yet and you're planning on filing, if you're having problems with your bank, just, you know, find a bank out there that will work with you and give you their attention.
Thank you, Mark. So we do have a bunch of questions. Right before I do that, I'm going to share one more poll because I said I just needed to catch up. And while they're asking that, while this is being launched, I'll put out a couple questions. Have you received your funding yet? We put this out there because a lot of people are interested. We have had some clients that received funding. Mike, you had we're talking about utilities before. Do utilities include, is it just facility utilities, or does it include telephone and IT?
I had read that telephone costs were included. I can't give you a definitive answer when it comes to IT at this point. We have to wait and see. We'll keep our fingers crossed that it does include that. And let me just stay on the same thing about what's included and what's not included, because it was something I forgot to mention before. You know, even on the rent calculation and that type of stuff. So I have a lease, and I'm paying rent, and it's under terms of a long-term lease signed before February 15th of 2020. If it's a triple net lease and I'm paying the real estate taxes, I don't know, I don't have an answer for you concerning whether or not that would be part of the loan forgiveness program. Again, we have to wait and see, but that's one of those ones where, you know, hopefully the guidance comes out early enough so that everybody can act accordingly, you know, from the standpoint of paying bills when they need to pay them, because that does come into play, especially in New Jersey, come May 1st, you know, because that's when people's real estate taxes are going to be due.
Right, you're talking about, I mean, we anticipate more guidance is going to come out as it relates to the forgiveness, how it's going to be reported, how you have to report to the bank. They haven't given the definitive guidance on that yet, right?
I mean, in many ways, what we've done is we've been handed a bat, a baseball, a couple things that are, you know, flat round things or square things, and we're told, here, go play the game. Okay, we're not told what the rules, what the baseball rules are. So it's difficult. It really is.
Okay. As it relates to keeping records, you and Ken emphasized this a lot before. We're trying to be very straightforward with this of you want to be running your business as you normally would, keeping your records as succinctly as possible. And we're not trying to moralize here, but don't try and rig the game. Somebody was asking about prepaying expenses, prepaying rent and utilities. I just wanted to get your comment on it. I see you shaking your head, Mark.
Well, again, you're limited. I think they anticipated that, which is why they decided to limit to 25%, because in the statute, the actual language in the act did not provide for the 25% limitation. So the Treasury came out with that limitation. And I think it was in anticipation of people laying people off and then turning around and, you know, paying 5 months rent instead, things like that. They didn't want that to happen. The goal is to keep people working for the 8 weeks. So
Right.
Yeah, and I think the other danger here, you know, because you do get comments such as, gee whiz, if I do this and it's not according to what the rules are going to be, they'll ding you. Well, we don't know if there's just going to be somebody dinging you for a couple dollars here. I mean, they may take the application for the forgiveness and throw it completely out the door. So I would hope that people are not saying to themselves, I'm going to risk, you know, that $2 million loan forgiveness because I'm going to try to sneak in $30,000 of rent that doesn't belong there. I just think that would be, it's just not smart.
Just as far as documentation and be prepared, just make sure all the things Mike talked about with copies of your invoices for your utilities, having your lease agreement ready, showing the payments you made. We anticipate that it's cash basis, but who knows on guidance, it could be accrual basis, but we think it's cash basis. So looking at and making sure your payroll company can run those reports for you. It's not just the cost, it's also headcount that we didn't talk about, because and on the original application, I don't think anyone understood what the IRS is getting at as far as headcount. So you may have to do some sort of reconciliation with whatever payroll provider you have with a headcount report, which may include full-time equivalents, and show the full-time equivalents before you got the loan or after, and then during the 8-week period on average. So again, these are the things that we're waiting to hear about at this point in time that we have not. But the payroll companies they've been in regular touch, I know, with us with updates. So as we hear more things about what their capabilities are to run reports, certainly pass that on to our COVID website, on our own website. We'll pass on the information and keep that as a resource.
Right. Ken, you did emphasize the whole bit with the head count, and I did skim over that on item number 1. But if you look at the rules right now, it specifically talks about forgivable purposes described below an employee and compensation levels. So it specifies that not only do you need to keep the compensation level up to par, but also the head count. So again, these are things that we're going to have to monitor, and we'll find final guidance. I mean, in many cases, just trying to figure out what's an employee and what rules you're supposed to look at. You're supposed to look at IRS rules. You're supposed to look at SBA rules. They're different. So, my advice through the whole thing is that, pick a side, figure out what you're doing, and consistently apply it when we go for the loan forgiveness, short of not having specific guidance. And, just make sure that you monitor the number of people that you have working and the number and the amount that you're paying.
Now, Mark mentioned about employees before and support and documenting their employees, and he mentioned 941, 940s. A lot of our clients and companies are on PEOs. I do know that some banks are accepting PEO reports. Now, PEOs also charge fees. I'm not picking on them in any way, but they do charge fees, as does payroll companies. Those fees are not part of the calculations, correct?
Correct.
Okay.
Brad,
Go ahead, Mark. Go ahead.
I just wanted to follow up on 2 things that Mike was talking about before, which is the FTEs, the head count, and the compensation level, and one other point. So the FTEs are more important than the compensation level, because if the compensation is reduced by less than 25%, then you should, in theory, not get dinged based upon the act. The head count, or the FTEs, what they refer to, is done on a proportionate basis. So if your FTE count went down 5%, your loan forgiveness goes down 5%. They're more concerned about head count than they seem to be about the actual dollars. The other thing is,
Mark, on that, real quick, obviously, if you don't have anything in the pot, then you can't get forgiveness. So that's why they're more concerned about, head count than they are dollars, because if you're not paying out the dollars, you're not getting forgiveness. I just want to, that's 100% zero forgiveness if you're not paying the people.
Right, of course.
Now, so Ken, because one of the questions that come in, and I've seen this, and I've seen it personally too, is that some people have been laid off and they started collecting unemployment, and now if the company applies for PPP, do they we're going to pay you for the time? And I just heard on the news this morning about people dealing with unemployment. Some people may say, I just want to stay on unemployment. So what are your thoughts?
Well, that was a big discussion when they were passing the third stimulus bill, because when you increase the unemployment amounts, where it makes it that some of your workers may not want to come back to work, they feel they're better off staying at home and collecting unemployment, then what does that do to the economy? Can you even get the workers back that you need to run your business? Right. So you're going to have a mixed bag here. You're going to have some people who want to come back to work. People who are dissatisfied with their jobs may just want to sit on unemployment and collect those larger checks. Again, from the standpoint of the business, as we said before, you got to run the business the way that you need to run the business. Can't worry about the forgiveness. Can't worry about the pot. You got to worry about the what you need to do to take care of your customers or your clients, and what the resources you need to accomplish that. And the rest of it will fall. The chips will fall where they may. But if you're not paying employees, you're not getting forgiveness. I just to be very clear on that, because it's based on payments to employees.
And now owners, if they're on payroll, I'm not talking about draws and distributions or guaranteed payments. If owners are on payroll, they're part of the PPP, payroll costs up to the $100,000.
Well,
Correct.
plus, which is the little loophole here, right? So, I mean, the way I read the rules, because this is where we thought there was a $100,000 cap, that includes like a defined benefit contribution payment. Like normally a 401k is limited to limits, but if you have a group where the owner is contributing a large amount to excess of millions of dollars to the defined benefit plan, then you get into the question, well, the rules say include your benefits. It doesn't say, it says pension benefits, it doesn't say 401k. So you could have a situation where an owner's comp is millions of dollars in this equation for a loan.
Right.
Hey, Ken, on that point, and the other part is that we were going to try to talk a little bit about the self-employed applications because they have to go in, they can go in starting tomorrow. What is your comment regarding the inclusion of SEP payments for a self-employed person? So if I'm a self-employed person, I made $250,000 last year on my Schedule C. I took a SEP deduction for 50 grand. What's my loan forgiveness? How's that going to work?
$150,000 plus your health insurance. That's the way I see it right now.
That's the way I see it too. I think in some cases, I also see that you probably have to make an adjustment to your Schedule C earnings if they're over $100,000 for your self-employed, for your Social Security tax. Again, there's no guidance on that. I was looking to see whether or not there was something on there, but again, emphasizing that application period opens tomorrow for those who are self-employed, and it's the same thing. If you don't apply, you're not going to get it, and you gotta get in touch with your bank, a bank that you've had a relationship with, back from February 15th. Get those things in. We don't know, and please jump in here, Mark or Ken or Brad. At this point in time, we're not certain how the loan forgiveness is going to exactly work for those who are self-employed, from the standpoint of the quote unquote formula that's going to be used, because that's going to be a tough one to figure out. A little bit different than if, I have a situation where a employee owner was otherwise getting a W-2.
Yeah, so the way I read, I think you were going to have to wait for Q&A on this, because the way the law actually reads is it defines the payroll costs, including basically compensation up to $100,000, which is basically self-employment income, and it defines forgiveness as paying out your payroll costs, which means that I have to earn income during the 8-week period in order to get forgiveness, which doesn't really even make any sense. So we're going to have to wait for the Q&A to show exactly what they mean by that, because that's exactly how the law is written, and there's zero guidance on it at this point in time.
Right.
Right.
I didn't see anything on it either.
I mean, there's plenty of situations where you have people who are self-employed who can't go out to their clients. My own wife is one of them. She has to physically go somewhere, and she's prohibited from doing so under the state rules. So her income went from X to 0, and as long as the rules stay, it's going to be 0 during that period. So theoretically, there's no forgiveness.
So,
Right.
So Mark, people want to know what X is. No, so to emphasize, because the person asked the question multiple times and weren't clear, I apologize. It doesn't exclude people if they make over $100,000. They're limited to $100,000.
Correct.
Okay. Payroll costs. Mike, because we're announcements. Person asked, she asked a lot of questions. A sole member LLC with 2 full-time employees, should I apply as a self-employed or no? That's what they said. So while you're answering that, I'm going to launch the last poll.
That would have been as a sole proprietor, which could have filed last week.
Right.
Okay, so they may want to reach out to somebody and talk more about it, about that. We launched, and they could still apply though, right, Mark?
Yeah,
to your comment?
Yeah. I mean, it doesn't prohibit them from applying tomorrow or the next day. The program theoretically is open till June 30th. However, the sooner the better.
Right. So before we close the program, I will ask Mike, Mark, and Ken for any last comments. I do want to say that I want to thank everybody for attending. Hopefully I'm going to close out the poll in a minute. Remember, this is to help you get CPE if you need it. So please answer within the next couple seconds. Ask, when do you expect us to recover? 8 weeks. I'm going with that magical 8 weeks from the program. 17% said 8 weeks, 30% said 6 months, 37% said 1 year, and 15% were not affected. So good for them. I'll share the results and we'll talk about 2 items and then ask you guys if you have any closing comments. If we didn't get to your questions, we apologize. I know somebody asked a very big question about the YMCA. We're going to have to address that separately. I apologize that you typed the whole thing. But somebody said that, you know, we're bashing the banks or throwing dirt at the banks. We weren't trying to throw dirt at the banks at all. We feel very bad for the banks because they're going through a lot. This was dropped on them and they're trying to get their head around this whole thing. They're doing, some of them are doing a great job and some of them may have fallen down. As Mark said before, it's a lot of relationships. But to that point, we are going to have 2 more sessions over the next 2 weeks and maybe continue on afterwards. But our focus over the next 2 weeks, we don't know the order yet. It's either going to be bankers first and an insurance person, or insurance person and bankers. The bankers, we want to have them come on, tell us what's going on with the process, what happened, tell us some war stories. The insurance people, we're looking to probably talk to them about business interruption and any other insurance factors they think that they need to bring to our attention. So watch for the emails. If you have a topic that you'd like us to try and have presenters talk about, feel free to email me. And we'll be happy to try and put together a session on it. We want to make this as informational as possible so that you get as much out of it. With that, Mike, Mark, Ken, any other comments?
I'd like to just make one mention. You brought the thing up about the banks. I think the banks have done a tremendous job. People have to understand that our world was completely different a month ago, and what's happened over that last month from the standpoint of not only the pandemic but also the financial crisis that's going through here. The banks had a very short window of time to get their systems up, and I was on the phone with clients with their banker Saturday morning, Saturday afternoon, Saturday night, and then Sunday afternoon and Sunday night at 10 o'clock, we were on the phone with a banker who was helping a client. So I think the banks have been tremendous with this. I do hear that there's frustration from customers' part, but it's the ones that really don't have the existing relationships. The ones that have the relationships, they've gotten a lot of help and assistance from the banks. So like I said, I mean, the bankers individually have done very, very stellar work in this area.
Just one last note, just make sure if you haven't put your application in at this point in time, you try to get the application done. If you need assistance, let us know. Let the partner who's helping you know where we could assist you, because again, it's first come, first serve. So we want to make sure that everybody gets their applications in. And as far as the banks, I agree with Mike. They've done a tremendous job. And we're just our goal here in the first thing, as we talked about, is just what the current environment is and what's going on, and imagining the banker receiving every single application for all their clients that they've ever had at the same exact time. That's a hard thing to deal with. They're doing the best they can. But I'll leave it at that. If you need any resources or any help, please reach out to us, and we'll be more than happy to assist you to make sure that you get your applications in, because we saw about a quarter of the participants have not at this point who are planning to do it.
Right. Mark, anything?
I think they covered both, and both of those guys covered the important points. I'll just continue to tell people if you have questions, reach out to us. We do have a help desk we set up for people that have questions. If you can email, I think it's COVID-19@sobel.com. I believe it's on our website. So
I'll put it on the screen right now, Mark, as you're talking.
that'd be great. So yeah, if you reach out to that email address, we have a whole team that's helping people with regard to their questions and communicating, because there's been a lot to go around. And other than that, I'd say continue to just stay safe and social distance.
Thank you very much. Thank you, Ken and Mike also. Thank you, everybody, for attending. Again, if you have any questions, feel free to email us. These questions will be reviewed, especially the ones that haven't been answered, and we'll be sending out a summary for information, but we will. Thank you very much, everybody, for attending.
Okay. Thanks, everybody.
Thank you.